Hey everyone, PayPal reported fourth quarter and fiscal year 2023 results that sent the stock price crashing. As of this recording, PayPal stock is down almost 12%. So in this video, I'm going to review those earnings results that sent the stock price crashing. I'm also going to update my buy recommendation on PayPal stock. Coming into this quarter, I had PayPal rated as one of my top stocks to buy in 2024. You're going to want to tune in to see if I'm changing that recommendation. So let's jump in. Let's look at these numbers that sent PayPal stock price crashing.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Right, so a few months ago, PayPal hired a new CEO, and the CEO has gave investors a update on observations he made and the actions that he's taking. And so one of the areas of focus for 2024 is going to accelerate the branded checkout business. And we're going to see a little bit later, this is PayPal's most profitable segment, the area investors want PayPal to focus most on. Second, the CEO wants to unlock some of the power of its data to create more value for customers and investors. This is an area I think PayPal can do better in. They've got big business with a lot of transactions taking place. They can harness that data to more effectively serve customers and more effectively generate revenue and profitability from each customer, and then operate more efficiently. I had predicted that cost cuts were coming and job cuts were coming. And just a few days before this earnings release came out, we saw that PayPal was going to cut their global workforce by 9% as part of the turnaround plan. So again, the CEO confirming that they want to operate more efficiently. I wouldn't be surprised if there were more job cuts announced later in the year after these 9% layoffs work through the system and the CEO evaluates if there's any more room to go. And I wouldn't be surprised if there is room for more cost cuts. And then finally, the actions that the CEO is going to start taking is to reinvest the cost savings into product, engineering, and marketing. And I wish this third one would be removed here, and I wish there would be more focus on product and engineering. PayPal hasn't really innovated its services in a while. They could use some more innovation, some more product innovation, and less marketing, in my opinion. However, it remains to be seen. I haven't seen this new CEO in action, so maybe there is some effective marketing campaigns. Certainly, I think there's room for more incentive and promotion on the active user count. As we'll see, PayPal is losing millions of active customers, so maybe there is room for some promotion and some incentive activity to try and re-engage some of these accounts that haven't used their PayPal account in a while. So let's see the effectiveness of these campaigns from the new CEO going forward. So in the most recent quarter, total payment volume increased by 15% and it was up 13% year over year. And revenue increased 9% and was up 8% year over year. Total payment value is what PayPal transacts on its platforms, and then revenue is what PayPal keeps from those transactions. So the more transactions, the more total payment volume, the more PayPal generates revenue. So that's good news for PayPal. And then earnings per share increased significantly in the most recent quarter and the most recent year. Non-GAAP EPS was up 19% to $1.48 in the most recent quarter. However, this is an area of trouble for PayPal going forward into 2024. And that's going to be the reason why I'm going to highlight why the stock price is down so much. I'll share that with you a little bit later in the video. So I mentioned total payment accounts or active accounts are not doing well. 426 million of active accounts in the most recent quarter. Active accounts fell by 2.5 million from the previous quarter. And if you look back, the active accounts have been falling consecutively. I believe this is the third or fourth quarter of decreasing active accounts where they're losing millions. 1 or 2 million every quarter seems like they're losing. And that's not been good news for PayPal. part of the reason for this was the previous management team had focused on more profitable customers and decreased promotion and incentives. And we notice here that it's increasing. You see the transactions per active account, that was up by 14% year over year. So they're keeping more of those high value, high transacting users. But what PayPal had done in previous year is to focus not so much on those customers that only use PayPal. Maybe when you send them a promotion like, spend $5 with your PayPal account and we'll match your $5. Things like that, those kinds of promotions that get users to, if they haven't been using their PayPal account for a few months, it gets them to use their PayPal account. It reminds them about their PayPal account. But then maybe they again go dormant for several months after using that promotion. And so the previous management team decided that wasn't effective, right? They're wasting their money trying to re-engage those dormant active accounts, and it hadn't been working. So they kind of reduced those promotional activities. Seems like the new CEO might re-engage those types of activities, given how I highlighted one of the actions they wanted to take was marketing. They wanted to boost marketing, and that's a form of marketing, is sending incentives and promotions to dormant accounts to get them to re-engage. I would like to see PayPal end this streak of continuous active account declines. In 2023, I had been talking about, yeah, they've been losing active accounts, but it hasn't shown up in the company's earnings per share yet. It hasn't shown up in the company's profitability yet. We're going to see now for 2024, it's starting to show up. Earnings per share is not expected to grow anymore the same way that it grew in 2023. So it's starting to impact revenue and profitability for PayPal with all of these active accounts going away. And longer term, it could spell trouble, because if you don't have a large scale of active accounts, then merchants will be less inclined to make PayPal a payment method on their platforms, on their websites, which will then make people less interested in having a PayPal account, which will then make merchants less interested in having PayPal as a payment method. And it can start this negative virtuous cycle that can just make the business worse and worse and worse. PayPal has spent decades, right? 2 decades building up this business, building up over 400 million active accounts. That's making it attractive for merchants to accept PayPal. They need to continue that trend. So I would be interested in seeing PayPal stop this decline of active accounts and doing it effectively, not spending too much to stop that. Because if they are having to spend a lot of money to stop this decline, that could signal that PayPal is no longer offering customers a good value proposition. It's no longer a favored method of payment, and that could signal trouble for the company's prospects longer term. So here are the several methods of total payment volume that PayPal generates. They have the PayPal branded checkout. They have PSP, which is unbranded, mainly from Braintree, which is a full stack volume and does not include the gateway exclusive volume. They also have Venmo, and then they have their relationship with eBay, which is kind of diminishing, right? eBay has transitioned into their own payment services, and they're trying to get users off of using PayPal. And so that's hurt PayPal. You can see their transaction volume fell 31% in 2022 on eBay, and then another 10% in 2023. Now it's a small part of its business. It's only 2% of the total. It used to be a larger part of its business, but eBay, like I mentioned, is transitioning to their own payment method. But what investors want to see is more of this PayPal branded checkout. It fell in 2023 down to 29% from 30% of the business. This is the most profitable segment of the business. This is where investors want to see more growth, more percentage of the overall business be from PayPal. That's why the CEO mentioned in the beginning, one of the goals is to increase and accelerate this part of the business. And I was happy to hear that, because that's the most profitable. That's the area we want to see more growth in the business. I was happy to see transaction margin improve by 3.5 basis points sequentially. That was driven by minimal headwind from merchant contractual compensation versus the third quarter. This was another area where PayPal had, for several quarters in a row, the transaction margin was falling, and that was a risk, and I'm glad to see that improved. So that decline stopped. That was impressive. That was good to see. I would like to see that same thing happen with the active accounts. I would like to see that decrease stop. And finally, guidance. This is the reason why PayPal stock price fell as much as it did. Very poor guidance for 2024. Earnings per share expected to be in line with the prior year. Flat. No earnings per share growth for PayPal in 2024, following a strong earnings per share growth in 2023. That's partly what had me excited about PayPal stock, was the strong earnings growth with the cheap valuation, although now that's expected to decrease and be relatively flat in 2024. And free cash flow of $5 billion, which would be an increase from the $4.22 billion in 2023. That part is still solid, excellent free cash flow growth in 2024. So to update my recommendation of PayPal stock, I am keeping PayPal stock on my list of top stocks to buy for 2024, but I have downgraded it a notch. I'm less enthusiastic about PayPal stock now than I was before these earnings came out. I'm not happy with this 2024 earnings guidance, and so I wouldn't be surprised if in the next coming days and weeks, as I conduct further analysis, if I remove PayPal stock. But for now, I'm keeping it up there. I didn't see enough here to remove PayPal stock from my top stocks to buy, and the 11% decrease in valuation offsets some of this disappointing earnings guidance. So I'll keep you posted. I'll have a lot more updates coming out on PayPal stock in the coming days and weeks. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.